What is accounting equation? Accounting equation is assets is equals to liabilities plus capital. At any time in the business, assets must be equal to liabilities plus capital. To better understand this equation, I have just passed three journal entries. We will post these journal entries in this equation so that we can better understand this concept. I have just write it down here: rules of debits and credit, assets, expense, liability, capital, revenue. Increase, decrease. Whenever asset and expense increases, debited, decreases, credited. Liability, capital, revenue increases, credited, and decreases, debited. So Mr. X started business with cash $80,000. The journal entry will be debit cash, credit capital. Cash is asset in nature and capital is owner's investment. So asset is increasing and capital is also increasing. Asset is increasing, debited, and capital is increased, credit. Second entry, purchase goods on credit, $20,000. He purchased goods on credit, not on cash. So accounts payable will be created. Purchase debit 20,000 and accounts payable, that is we have to pay $20,000 after some time as per our payment terms. Account payable is created. Purchase debit, asset increasing, stock increasing, inventory is increasing, accounts payable, liabilities increasing, credit. Purchased furniture for cash 1,500. Furniture itself is an asset of business, so furniture account debit 1,500, and cash. He purchased furniture on cash, not on credit. So cash, simply credit cash. Furniture asset is increasing, and expense. Cash is an expense, so in this case cash is decreasing, so expense is creating. We have just 1,500. Now I have just write down these transactions in this equation. Let's see here. Assets, liabilities plus capital. Assets, cash, furniture, stock, account receivable, accounts payable, Mr. X capital. First transaction, cash, debit cash. Cash is increasing by 80,000 and capital is increasing by 8,000. Both sides equal, 80,000, 80,000. Now second transaction, purchase goods on credit 20,000. Stock is increasing 20,000 and accounts payable 20,000. Both sides equal, 80,000 plus 20,000, 80,000 plus 20,000. Now he purchased furniture for cash. Cash is decreasing by 1,500. On the other side, furniture is increasing by 1,500. Stocks remain same. This side remains same. No impact here. 20,000, 80,000. So the total will be 80,000 minus 1,500, 78,500. 1,500, 20,000. Then here 20,000, 80,000. So the final equation, assets is equal to liabilities plus capital. Asset side, when you total this side, it become 1 lakh, and here 20,000 plus 80,000 is also become 1 lakh. So hence we have proved that assets is equal to liabilities plus capital at any time in the business. They should be equal. Thank you very much.